Where you should be putting your money right now in today's Investing Edge. Adam Bold, founder and CEO of the Mutual Fund Store, and also Joseph Duran, CEO and co-founder of United Capital Financial Partners. Adam, let me start with you, because I see here in your notes that you would not invest in gold funds at the moment, which is actually kind of awkward, because straight after this we've got the CEO of Global X Funds on, who is going to be talking about the launch of their new gold mining ETF. So why would you steer clear?
Well, look, the price of gold has gone from $600 an ounce to over $1,400 an ounce over the last 5 years. And I'm not saying that there's not some more upside in gold, but let's face it, the easy money in gold has been made. And what we want to invest in are the things that are getting ready to go up, not the things that have already run up.
Joseph, what about you? Where would you be putting your money, or not putting your money, as the case may be?
Well, I think we've been telling our clients around the country to get ready for an increase in volatility. And there are a couple of things going to drive that. Interest rates are going to go from a band of 2 to 4% to probably 3 to 5%. That implies a more volatile market. Second, you have all the other crises that have occurred, and this recovery we've had looks very, very anemic. So we expect this second quarter coming up to be quite different, maybe similar to last year in the second quarter when we had a 10% decline. And we ended the quarter relatively even, but the choppiness to be higher. So the underlying trends are good, but you want to be with global, very large mega cap companies, because frankly they can weather the storms, and they capture the growth that's happening in the rest of the world, as well as happening now in the U.S. as well.
Adam, last week Lee Cooperman told me, hey, I'm sort of worried that I'm in line with consensus, but consensus is consensus for a reason. It's not always wrong, even though he liked to be contrarian. I'm looking at your thoughts, and you're saying you're high on U.S. stock funds, and I know a lot of other people are. So that may mean you're right, but how do you get a different strategy, or the strategy that is at the top of the tide?
Well, I think one of the things you have to do in this market is that if you're going to invest in mutual funds, you want funds where you're not buying the entire index, because in this kind of economy, not everything is going to go up. There are going to be some companies that do very well. And so when you look at the stock funds that I've recommended, the FMI Large Cap Fund, the American Century Small Cap Fund, and the T. Rowe Price Capital Appreciation Fund, these are funds where the managers are picking a small number of stocks that they have very strong conviction in. And the reality is that there's all this noise, all these things to worry about. Japan, Libya, Egypt. Just like last year, we had the BP oil spill, we had Greece, we had thoughts of a double dip. There's always things to worry about, but the reality is that corporate earnings are going to be very, very good for many companies. And if you can find fund managers who can identify those stocks, I think you can have very good returns in this environment.
Adam and Joseph, thank you very much for joining us.